The smart money concept is relatively new in the industry, something that is becoming more popular amongst most traders today. So in this video, we just decided to bring you in detail on how basically to approach the money using the smart money concept. So in this video, we're going to be giving you step by step exactly how you can do this and explain some of these concepts that may be somehow confusing to most people, breaking down everything in this video, right? So some of these trade examples that we're sharing right now, as you can see, this is 1:15, which is basically more compared to the normal that we're used to, which is the 1:3, 1:5, using the trend line strategies and so forth, right? So as you can see, another example over here, we have another risk to reward for 1:16, right? So which is quite a lot, right? So as you can see, but this approach, again, you have to keep in mind that it's actually mostly a swing approach. So basically, there's less scalping. You can actually scalp with this strategy. It's mostly more about swinging, right? So you look for your levels on maybe an H1 time frame, like what we're doing right now on Nasdaq, or you can go to the H4 or higher time frame, and then you can come back and refine your order blocks, your entry points on smaller time frames like the M15, the 5 minute, the 1 minute. You have opened your trade based on the H1 levels or 4-hour levels. It will allow you to be in the market for the longest time, but because you refined it on the M15, 5 minute or 1 minute, it allows you to have a smaller stop loss while still being able to capture the whole move. And that's basically how the smart money concepts works, right? So in this video, we're going to be breaking down step by step in more detail so that you can get a hang of it. And if you got any questions, you can always leave comments down below and we'll get back to you, right? So let's get straight into it. Welcome back to Day and Night Forex YouTube channel, and on this channel we share different ways of making money online, mostly on Forex trading. And in today's video, we are going to be talking about the smart money approach to the Forex industry. It allows you to enter the market with a smaller stop loss than the average approach that we usually have in most strategies, right? So as we said, this is something that is quite new to the industry, but it's also getting very, very popular amongst most traders. So we decided to put out this video so that you can have a complete guide on what exactly it is and how you can also have an approach to it. So in this video, we are going to be breaking down these concepts over here, starting off with market structure. Basically, with market structure, it's nothing new. Market structure will always be the same thing, right? So it's basically the highs and lows, which is basically the sequence in which the market moves, right? So you already know, if we are in an uptrend, we have our higher highs, higher lows, higher highs, higher lows, higher highs, and basically this is our uptrend, right? So inversely, when we are in a downtrend, we are making our lower lows and then our lower highs, right? So lower lows, lower highs, lower lows, lower highs, lower lows, and that's basically the market structure, right? So this is the market structure to the downtrend. This is market structure in an uptrend, right? So that is basically the basics of market structure. As we continue with this video, we're actually going to talk about something which a lot of people find quite confusing, right? So which is the difference between what is called the choke and what is a break of structure, right? So BOS. These are the new smart money concepts, which basically refer to something that you might be familiar with. And basically the choke right over here, which stands for change of character, is simply when the market decides to actually turn from an uptrend to a downtrend, or from the downtrend to an uptrend, right? So we actually have some visual examples right here at the bottom, so that we can give you a clear perspective on what we mean by that, right? So as you can see over here, we just have an illustration to show exactly what is a change of character, and then what is a BOS, which is a break of structure, right? So as you can see over here, this is an example of a downtrend turning into an uptrend, right? So as you can see, right now we are in a downtrend. We're starting off with the break of structure. Break is the impulsive move in this direction of the trend, right? So remember, when the market is moved, we have the impulse move, which is the major move in the direction. Then we have what we call the correction, right? So the correction is the pullback, which is basically allowing the market to basically breathe before continuing again and giving us an impulsive move in the direction of the market, right? So that is what we call the break of structure, right? So that movement, that impulsive move that goes past the previous level to create a new level. So in this in the downtrend, basically the impulsive move that goes to break previous lower low to make a new lower low, that is what we call the break of structure, right? So this what is happening here is what we refer to as the break of structure. So that break of that previous lower low to create a new lower low over here, that is the break of structure, right? So now this one, as soon as we start to have that correction or the pullback. That means now we are anticipating that there's going to be a new impulsive move in the direction of that trend, right, of the downtrend to continue with the trend. The moment that the impulsive move comes to retest this low over here and succeeds in breaking it, that means now this one is no longer the lowest low. We now have a new lower low, right? And that is what we refer to as the break of structure, and that is what we mean by break of structure. Now, inversely to that, we have what we call the change of character. Now, change of character is basically when the downtrend is changing into an uptrend, as you can see over here, right? So this is the turning point in the markets, basically, for the market, right? So as you can see, when the price is changing direction, right? So as you can see right here, we have another break of structure over here, and then we have this impulsive move over here, and then we came back to create that pullback. But then this pullback, as you can see, it actually went higher than the previous lower high over here, creating a point that is higher than the previous lower high over here, right? So as you know, as soon as we have something like this, when a lower high is broken by a higher point than it, that means we are now anticipating a change of direction, right? Every time that we have a point that is higher than the previous high, that means we are starting to have our uptrend, right? So remember, the uptrend is higher lows and higher highs, a starting point for our higher highs to so that we can actually anticipate to have another higher point than this one over here, and we're no longer anticipating the market to go down all the way below this lower low point over here, right? So that is our change of character. So that it is basically that break of structure is what we're calling the change of character, right? So as you can see over here, it came to break this lower high over here to give us a high, and then we came back here and got now we can call this a lower high after the market has basically broken structure over here, right? So this is our new BOS over here, right? So this is a new break of structure because the market came back, the correction move that it gave us over here before it gave us an impulsive move in the new direction over here, which went higher than this high over here, confirming that we're starting an uptrend, right? So therefore we refer to this as a break of structure, as now this is the new direction of the market, right? So the same applies to the downtrend movement. So as you can see right here, we are having our break of structures as the market is correcting and then impulsing back in the uptrend movement, which is the current trend in the current market that we are at in this point, right? So that is the current trend that we're in. We're in an uptrend, so we're making the impulsive moves to the up and then the correction over here, and then that gives us the break of structure as soon as we have an impulsive move that moves higher than the previous higher high over here. So remember, these are our higher highs, these are our higher high points over here, right? So and then we have our higher lows, so the higher lows over here, which are made by our correction points, right? So when the market corrects before it gives us another impulsive move, which gives us the break of structure as we are moving in the right direction of the trend, right? So but as soon as we fail to have another higher low over here when the market is correcting and it comes back to break this higher low over here, giving us a lower low, right? So again, this is the change of direction, this is the break of structure. So this is what we call the change of character, right? So the break of structure, when the market is turning around and changing from one trend to the other, this is what we call the change of character, right? So that is just what you need to understand about this. And that when this happens, it actually gives us the opportunity to find trading opportunities, right? So because the market, before it actually starts going impulsively in the new direction, if the market will always come back to retest some levels, right? So back to fill in some orders where the big boys have turned the market around from, right? So where maybe the unfulfilled orders, buy orders or sell orders, that will be at these levels where the market has turned around at, and so that actually is where we'll be anticipating to hop on the market and basically go with the big boys, right? So right along with the big boys, right? So basically this is what we wanted to break down for you to actually illustrate and clearly differentiate between the change of character and the BOS, right? So which is the break of structure, because we've seen most people have been struggling with that. So that is basically it, right? So now to move on with the rest of our video, we have what we call the point of interest, right? So again, if you can just come back to this these illustrations that we have over here, basically the point of interest is where we're anticipating to enter into the markets, right? So this is the point of interest over here, right? So where we find our order blocks. And if you are new to the concept of order blocks, we have 2 videos that we recently uploaded on this channel, so you can just go watch those videos to understand what exactly are order blocks. But basically order blocks, they come in different variation, right? So some of the most common ones is basically the bullish or bearish engulfing candles. That is where you'll be finding your bullish your order blocks, right? So at these levels, those are what we refer to the point of interest, because we are anticipating that the market is going to go back to reach those levels, and that will give us an opportunity to hop on into the market, right? So, and then when this happens, we actually have what we call imbalances, right? So this is what we define as refilling of gaps that are left in the market, right? So let's say, for example, the markets, as you can see over here, these huge candles over here, they basically show us that the market, there's so much momentum in the market that basically the investors, they're just pushing the market so hard, right? So at the moment, right? So right here, there'll be so much supply. So basically the market is going down heavy at the moment, right? So these gaps over here, what we refer to as imbalances, are basically these gaps that are being left between the 1 week of the candle from the previous week of the other candle, right? So as you can see, this gap over here is what we refer to as imbalance, and we anticipate that the market will come back to refill those imbalances over here. And as we can see, if we just go into if we can just expand a little bit to the left, you see that the market actually came back into that zone over there, right? So if I can just quickly zoom out for you so that we can actually see, then as you can see, the market indeed came back into this zone. And basically when it came back into this zone, we'll be anticipating that the market will actually sell. So let's just see what actually happened in the future when the market came back into this zone over here. And then we open to the side. As you can see, this is where the market actually tanked down from, and basically because this is the way orders that were not filled when the market had so much momentum when it was moving to the downside, right? So the market came back to fill in those orders that were left before it continued with the downtrend, right? Those are the areas where we could be looking for trading opportunities, right? So as you can see, there are more over here, and basically you just have to plot all of them, because at some point the market is going to come back and mitigate those orders over there, right? What we call mitigation. The next concept that we're going to look into is liquidity, right? So this is the smart money traps, right? We have the two most common liquidity grabs that we have the trend line liquidity, and then what we call the double top or double bottom liquidity grabs, right? So these are the areas where the smart money traders will know that this is where the retail traders are putting their money, right? So for example, here we have a double bottom over here, and the market actually came back just below that, and then pushed to all the way to the upside again. The big boys will be anticipating that there is money that is being kept at these lows over here. So usually the retail traders would enter on this double bottom right over here, and then when they enter the trade, the stop loss will be just below that level. So the big boys will basically come and sweep away all that liquidity, all that money, and basically continue in the direction which the retail traders were seeing, but because they entered a bit early, they will be kicked out over there, right? So that is basically what we mean by liquidity grab, and it also comes back in the form of trend line liquidities, right? So what we mean by this is that as a retail trader, you'll be anticipating that the market will short every time it comes to these levels, right? So the big boys will basically push the market just above that trend line before they continue with the trend, right? So this is fake outs or traps, right? So in the market, so that the big boys can actually get the money that you are putting at those levels, right? So that is just what we mean by liquidity. At these levels where the smart money will know that retail traders have set their stop losses, they have set their orders, and they're just looking to take you out of the market before they push the market in the direction that you are anticipating, right? So it's all about patience and waiting for a proper setup in the market, right? So that you don't get trapped in this liquidity grabs, right? So and then we have the inducements, right? When it comes to inducements, it's basically just fake outs, right? So exactly what we know as retail traders, what we refer to as the fake outs is basically what inducements refers to in the smart money concept, right? Is that just when maybe you have a fake breakout in the market, or you have a fake retest of a zone before the market actually goes through that zone. So these are basically some of this most common smart money concept that you need to understand in order to apply this approach of or style of trading. And basically it goes deeper than what we just did. This is just giving you a brief explanation of this smart money concept, right? So if there are any of these that you actually want us to go deeper in, you can just leave a comment down below, and then we will try our best to explain them in more detail, right? So what we're gonna do right now, I'm just gonna remove all these drawings over here so that we can just take a look at some of these recent examples that happened over here on Nasdaq, right? So we're just on Nasdaq right now. We're on the H1. So remember what we said, you can set your levels on H1 and then you can refine them on the smaller time frames over here, right? So for example, here we had a turning point for Nasdaq over here just recently, as you can see this. So we are on the H1 time frame. So what we're just gonna mark a few things, but before we do that, in the recent video, we shared a way to actually anticipate some of these turnaround points over here when it comes to smart money concepts, and it's basically using the RSI indicator, right? So I'm just gonna quickly put it over here so that you can see what we mean by that. So as you can see over here, this market was creating higher lows and higher highs, higher lows, higher highs, higher lows, and higher highs over here, right before it broke down, which is basically our change of character that we're talking about, or the break of structure, right? So the change of character before it came over here. But as you can see, if we look at the RSI here, yes, it was making higher highs and higher lows, but as you can see, this point over here, we are now making lower lows and lower highs, right? So now the market has already turned around over here, but as you can see on the chart, we are still making higher highs and higher lows over here, right? So basically, this is something that will give you a clue that, okay, the market is going to be turning around very soon, right? So we now be anticipating to be seeing a break of structure so that we can start looking for those trading opportunities. And this is just a quick trick that you can use. So this the RSI indicator set to the 14, which is the default period that comes with, right? So I'm just going to remove that so that we can just analyze real quick what happened with this trade over here, right? So if we can just quickly zoom in so that we can have a clearer view. So as you can see over here, higher low and higher highs, higher lows over here, higher high, higher high, and then another higher low over here, and then here we have our break of structure, right? So this is where we have our break of structure. So as soon as we have this break of structure, we're now looking for a point where the market will come back, right? So remember what we said about our order blocks. So our order blocks is basically the last candle, which is before when the market gives us an impulsive move that went to break down that level, right? So if we look at this level, that candle is clearly this small candle over here before the impulsive move that came to break this lower low over here to give us a new low point over here, a lower point over here, right? So we're just gonna quickly highlight this over here, and then we're gonna go down to a smaller time frame so that we can see if we can refine this and basically have a smaller stop loss, right? So remember, the goal is to have smaller stop loss, tight stop losses when it comes to the smart money concept, right? So now we are on the H1, so we're just gonna quickly go to the 15. Okay, so as you can see, we just came down to the 15-minute chart, and as you can see, this is the point where we got our order block on the H1. So now we're just going to refine this real quickly. We're just going to refine it. As you can see, if we can just move to the left a little bit, the point where we broke our structure is basically at this level over here, right? So we remember we marked it with the red line. So this is the point where we broke our structure, and the candle that broke that structure is this huge candle over here, this huge bearish candle over here. But as you can see, the last now as we go down to the 15-minute chart, the last candle, the last bullish candle, or the last candle before that impulsive move is now this small, almost a doji like candle over here, and that is the one that we're going to be taking as our order block, right? So I'm just going to highlight that one. We're just going to refine our whole zone into that block over there, right? So as you can see right there, and then we take the lowest point of that candle over there like that, and then we're just gonna go back and then see where would our entry point be. And as you can see, it's quite over there, almost straight to the T, right? So there was no time wasting whatsoever over there, and that is would have been our entry point. And in most cases, when it comes to stop losses, it's just above the order block over there. But we always advise people to put their stop losses above the most recent high over there, right? So which will be this point over here, so that you can give the market some room to breathe. But as you can see, even if you had put it just above this order block, you could have been very, very safe in this case. So if you can just pull out our short position marker over here and then just put it over there, our position marker over there, and then we just drag it to the left over here. I'm just going to zoom out a little bit. As you can see, this could have been a perfect trade over there. with an entry, and basically when it comes to your take profit points, you still be looking at the zones that are on the time frame that you got your order block from, right? So in this case, we are using the H1, right? So we're just going to look for the next point where we can have our take profit point at, and that would be the next zone where we are anticipating the market to basically turn around or push from, right? So as you can see that here we have a major support and resistance level at this level over here, right? So this is where we would be anticipating that the market will actually turn around from, so somewhere around at this level over here, right? So that is where our take profit would be for this trade. So if you can just take it down to that level, and then let's just see how much was that we could have made from this trade over here. So which is a nice 1s to 13, almost 1s to 14 from this trade over here, right? So this is basically how you trade the smart money concept, right? So it's just about finding your zone or your entry point or your point of interest on a higher time frame, and then you refine it on a smaller time frame so that you can have a perfect entry and a smaller tight stop loss, right? So again, we just saw another entry opportunity that you could have had right at the turning point of this market as well, when it turned around at this point over here, right at this lowest point over here. So again, we are on the H1 right now, so I'm just going to quickly zoom in again so that we can see what we are doing much more clearly. So as you can see right here, the market was giving us, so we have a low over here, we have a lower high over here, we have a lower low, and then a lower high, and then we have a lower low over here, right? So the break of structure is basically when the market broke this lower high over here at this level over here. So this is where we broke our structure, right? So basically, if we look at this level, the last candle before the break of structure, which was broken by this candle over here, would be this one over here, right? So, but as you can see, remember what we talk about? We spoke about the inefficiencies, right? So in this case, you can see that there's a clear inefficiency at these levels over here, right? So I'm just gonna mark them. So remember, the inefficiency we can also refer to as the imbalances, right? So the market came to this zone over here, but then the next week it only came back to this level over there. So if I can just quickly mark it for you as well. So right over here, right? So this so basically it left some inefficiency, some imbalance in those two levels over there. So the market would basically come back to get into those levels. So this will make our ideal order block the next one over here, which is this one over here, right? So we're just gonna highlight that order block right there. Okay, something like that, right? So and then now we're gonna go to the 15-minute so that we can see if we were able to refine this order block over there, so that we can perfect our entries, right? So that we can increase our risk to reward ratio over there. So I'm just gonna quickly let's just find this level real quick, and then we're just gonna quickly zoom in again. So as you can see over here, right? So now again, this is our break of structure. So our break of structure happened at this level over here. So we are looking for the last candle before the impulsive move that happened over there, right? So as you can see right now, if we come back to this lower time frame, we don't have imbalances anymore, because the wicks basically is a week to week, right? So basically we can look at the last candle before the market pushed to the upside, right? So that will be this candle over here. That is the only one where we are seeing some inefficiencies that the market would actually come back to retest to, right? So again, so we're just gonna refine this block. So I'm just gonna move this block to that level real quickly. So that will be this block over here. So we put it right at the tip of this, and then we put it right at the bottom of that wick over there, like that, right? So and then we go back to the future and then see whether our entry point would have been triggered, right? So as you can see, this will be our entry point over here, or maybe if maybe with spread you could have been triggered your trade over there, but basically this will be our entry point. So I'm just gonna quickly take our long position marker so that we can see where how far this entry would have taken us. So I'm just gonna put it right over there. And then our stop loss, again, remember what we said about stop loss, it's just below the order block, but you can also, if you want to be safe, you can put it below the previous low over there, right? So for this case, for this example, we're just going to put it right below this level over there, right? And then I'm just going to quickly again zoom out. So remember, your entry point is basically based on the H1, so we can quickly go back to the H1 to set our take profit points, right? So I'm just going to zoom out. So Our take profit points over here would have been either this one over here or this one at the top over there, because basically when the market is in a downtrend, we would anticipate that it will come back to retest this level where it broke so that it continues. Otherwise, if the market is going to turn around from this point, we're anticipating that it will come to create a higher point than this previous high over here. We are anticipating that the market would come back to retest either this previous lower high level over here, or to come back to retest this previous high point over there, right? So if we can just quickly drag our points right over here, that will give us 1:3, 1:3, 1:4. But if you come back all the way to this level over here, we would have seen about 1:9, 1:10. So we set our point over there, which is a previous higher point, right? So that is where we anticipate that the market is going to go. And as you can see, over time, it did eventually reach those levels, and our take profit was hit, right? So the market actually went higher than that. And basically, yeah, that is basically the smart money concept in a nutshell. If you want any deeper explanation on any of these concepts, you can just leave a comment down below, and we'll try our best to bring out those videos in the coming weeks, right? So with that being said, thank you very much for watching this video all the way to the end. If you got any questions, you can always leave a comment down below, and we'll get back to you as soon as possible. Don't forget to subscribe to the channel, like the video, share the video, follow us on our social media platforms for more updates. And if you're interested in joining our signals group, you want to trade with us, you want to trade as we trade, then you can simply check out the links down below or visit dayandnightforex.co.za, and you'll be able to get on our lifetime packages or monthly packages. It's up to you. Trade as we trade as well, right? So all our trades that we take, we share on that groups. So make sure to check that out if you're interested in trading with us. And with that being said, we'll be seeing you on the next one.